I remember working way back with Tesco in the early 2000s when they were looking at understanding what they knew about supermarket customers could be used in financial services. Do people that buy more bananas crash their cars more often, and those sorts of things. So they've made some great innovations around distribution, brand extensions, services they provide, and using data, really. And they're all things that you are seeing coming to specialty now.
Today, we're going to be talking about claims transformation unlocked and effectively the lessons that we can learn from motor and home insurance, effectively personal consumer lines, and then moving forward through to the specialty markets. So the age-old question of why we can't realise the same gains that we have seen in the personal lines markets within the specialty teams. But today, I am joined by three agile experts. So we have Patrick Hayward from Altus Consulting, Chris Payne, partner at EY, and Andy Stevenson, Consultant Director at PwC. So I think if you don't mind, we'll jump straight in with yourself, Chris, as a bit of a scene set in. So although I know acronyms are banned in the InsTech world, what is not banned is using words in different ways. And I think we way overuse the word specialty. So Chris, in terms of for you, what does specialty mean to you in specialty markets?
I think I got the nicest, easiest question there at the start. Well, it's sort of non-standard. It's non-standard stuff basically. So think it's not GI, it's not motor, it's not life and health. It's much more, complex risks. Think of political, think of marine, think of, there's a long list of lines of business where it isn't a standardized product, or a standardized product does not suit the risk that we're talking about. So it's very much the specialty and London market, I guess, that we're talking about, and from a claims context, it's more, it's sort of higher value, lower volume, as against, masses and masses in a personal line scenario where we've seen a lot of that kind of automation tech being deployed. So I guess what we're trying to do today is sort of unlock a little bit of that learning from personal lines into specialty. And I should have introduced myself. Yeah, I'm from EY. I lead our tech, go-to-market and alliances activities. So I spend a lot of time with people like Robin and people like Andrew, just trying to understand. I'm kind of doing two things. One, obviously trying to win successfully in the market around the bigger technology-related programs. And then the other bit, which I find more interesting actually, is monitoring the market, what's new, what's innovative, what's out there that our clients should be thinking about and we should be thinking about.
Brilliant. Thank you very much. And then moving down, Andy, after you've introduced yourself, if we can move on to some lessons that we have learned, or areas of the personal lines markets where we have seen success. We talk about successes, but what have you seen in your experience?
I might do a very similar job to Chris, but with PwC badge on. So I look at large tech implementations, but also keep an eye on the horizon to see what the new insured techs are in the market, see how we can help those deliver. In terms of the sort of big successes, I think for general insurance, I think what they've been very successful at is probably distribution. And I heard the tech bros on stage before talk a little bit about that. So I was pleased to hear that, moving from very traditional working in an office, brokers, then the telephone came along as a big piece of technology innovation. And then, the web quote and buy and distribution through bundling, which is what the guys on stage before were talking about. That started with the banks bundling products, for example. Then you saw brand extension, you saw supermarkets getting into insurance. I remember working way back with Tesco in the early 2000s when they were looking at understanding how what they knew about supermarket customers could be used in financial services. Do people that buy more bananas crash their cars more often, and those sorts of things. So they've made some great innovations around distribution, brand extensions, services they provide, and using data, really. And they're all things that you are seeing coming to specialty now.
Great, thank you. And then Patrick, any examples from yourself?
Yes, I'm Patrick Hayward. I am the claims lead at Altus Consulting. So I've been at Altus for about 7 years, and my background is probably more in the GI personalised space than it is in specialty. I'd say that from a personalised perspective, there's been a bit of a journey where if you look at kind of motor and the simpler end of home, where you've had some real sort of innovation around things like automation of the notification process, but also the use of analytics to analyse images for vehicle damage. And these things have really reached a level of maturity. I think we're now sort of moving to the stage where you have claims automation solutions for some of those simpler, low-value claims. And that's now moving to the space of your integration and your orchestration platforms. So things like RDT and Synergy Cloud, where they're providing the capabilities to I suppose, link into those different solutions and also third parties. And that's where we're starting to see that shift, is can you start to automate elements of the more complex claims and things become a bit more analogous to specialty.
So I guess then leading into, well, once you start including third-party vendors or a supply chain, it gets more complicated. But then a lot of things you said there, though, would apply to the specialty markets. So what do you think the barriers have been that have stopped us progressing in the specialty side in the same way?
I think when you look at personalized, there's a couple of things. I mean, firstly, you do have complexity. Certainly at the sort of high volume personal lines, you're typically dealing directly with the customer, and insurers have become quite good at obtaining information from and communicating with customers through digital channels and so on. I think when you get into specialty, you could be the lead on a claim dealing with multiple syndicates. You have various third parties and complex data coming in. You're calculating quantum, dealing with approximate cause. It's a bit of a different world, and also there is a strong litigation element to a significant proportion of claims. So all of this builds layers of complexity. There's also sort of a bit of a motivation side. So within personal lines, there's a strong play for efficiency, because a percentage point can make a difference in your ability to compete on the aggregators. Whereas I'd say in specialty, there is a much more emphasis on your longer term relationships, broker and client relationships, and getting the right number when it comes to quantum is probably more important than your time to settlement in most cases.
Yeah, I agree. So the absence of a burn-in platform, I guess, from an operational efficiency standpoint. And then moving on, so what are your clients telling you now, Chris, that they, on the specialty side, that they want to have from claims technology? How do they want to use it?
Yeah, I mean, I think there's kind of a parallel and a shift, I guess, is what I'm going to say, is that if you're looking at, in the specialty side, I mean, I think we all know how it's being used in personal lines and the focus around sort of triaging and digital brains and segmentation of service. But when you start looking more into the London market, I think there's a lot of parallels with what we're seeing around sort of workbench. If you think around the underwriting workbench, everyone's talking about that. That's all about, collation of data, reducing the amount of time the underwriter is typically spending on rekeying. It's still around 4 hours a day, I believe. I mean, that sounds a long time to be rekeying. But I think you can see that paralleling into claims. There hasn't been the level of adoption yet, as we've seen in underwriting. So I think it's going to be a different shift to what we saw in personal lines, where everybody invested in claims technologies, and then the policy stuff followed on. If you think of the kind of the guide wire adoption model, I think what you're going to see here is, I think you're going to see that in reverse. You're going to see the investment in the underwriting piece. But then when it comes into claims, I totally agree with your point. I don't think it's about, that little sort of piece on the edge. I think it's much more, again, around collation and insight and having the understanding of the claim more quickly, having control of that claim, and then controlling the claim's outcome. So some of these claims go on for years, right? So I think it is more around the information and the collation of that. So I think I guess the winners are going to be those that are dealing with the data better. And I think what we're going to see is more of an arms race towards the deployment of the right technologies to achieve that.
Thank you. And then, Andy, do you think, given the outcomes that these customers may want, do you think what they've asked for is going to deliver those outcomes? I guess going back to the old Steve Jobs adage in terms of never ask a customer what they want because they don't know.
Yeah, I think it's changing in the sense that what people have been looking at now in specialty markets and very recently has been really this kind of claim by claim approach. How do I automate and improve what's already there, make that faster and better? And I think is a different sort of perspective really on that now from a lot of claims function, which is take a step back from that and think about what is the claims function really there to do? It's managing a portfolio of claims, but it's the portfolio, not the individual claim. So where are my priorities? How am I managing my supply chain? Am I performance managing my experts appropriately? Am I performance managing my people appropriately? So the role of a claims function is very broad and varied, and actually what you want is technology that helps you position the time you have to spend in the right place. So yes, it's manage this one claim in front of me more effectively through automation, but it's actually step back and tell me some really interesting insights about my claims portfolio. How have world events overnight impacted my claims portfolio? How is American foreign policy going to impact my claims portfolio? They're the big things that can really change a balance sheet. So that's the sort of technology people want now, not just how do I move this claim from FNOL to settlement. That's all pretty much well done. it's more fundamental than that. It's actually tell me about my overall role and function, and how do I navigate through this and manage the risks that I have to manage for this organization's balance sheet.
Great. And then you touched on some outcomes and examples there, but Rich, very quickly from all three of you, what have you seen any of those practices in current use with your clients? Any kind of real tangible successes in the specialty markets?
Yeah, I think the one that's really gripping is ingestion of information, being able to take complex information and present it in a way that allows quicker decisions. So I'm contradicting what I said earlier, but that's a small step that's being taken. So I'm certainly seeing that as being a very much of the moment. People are seeing it's sort of a near-term win that they can achieve.
And same question, Patrick.
Yeah, I mean, I'd certainly echo that around claims data ingestion and the ability to, because there's an awful lot happening in the moment where there's a bit of a shift from probably either a lot of rekeying work on manual activities or the outsourcing of some of that stuff to which actually is really about taking information from loss adjuster reports or from forensic reports and then putting that into a structured format. But actually there are technology solutions that support that. I think when you're getting more into the analytics, I think some of the examples I've seen, particularly around some things like litigation risk and your exposures, there's some good work happening in that space, so you can understand I suppose locally and globally, what your litigation risk is across your portfolio, and that's very much around your existing and in-flight claims, as opposed to, I suppose it's analogous to your kind of your cat risk exposures, but it's about your in-flight world.
Yeah, I think what I'm seeing is that there were a lot of sort of point solutions that came out a couple of years ago that were sort of saying, we're world class at ingestion, or we do this, we can move from, take all these formats and digitize. And I agree with you, put it into a common format. I think the shift that we're seeing though at the moment is that there's such a speed of development around some of the sort of Gen AI capabilities and technologies. I think that you're going to see that that's going to move very quickly, and a lot of those point solution type tools are going to be less relevant, because I think you're going to see, I'm certainly seeing on the underwriting side, appreciate it's not claims, but stuff that was taking like 10 days is actually taking 90 seconds, and that's way beyond just ingesting the data. It's actually doing the full it's doing the full process, right? The speed to quote, it's all done, right? It's using those models in a very different way. And I think that's just game changing. So I think that will come through into claims. Clearly, it's going to be focused, I think, as Andy said, in very specific areas, but I think the principle's the same.
And then taking advantage of your specific expertise on stage, my background being mostly on the carrier side and having to write business cases and effectively pitch for investment within claims, because it's always been an issue on the specialty side. It's fine on the personal line side where you're effectively saying, I'm going to save X amount of headcount, here's my business case. Specialty side, you're predominantly trying to prove an indemnity cost saving, which is very hard because you're trying to prove a negative. You're trying to say, if I invested here, this wouldn't have happened. Very, very difficult. How would you go about kind of pitching to the board or wherever your investment comes from for a proper return of investment business case for claims innovation in the specialty market? So I'll start with yourself, Chris, if that's all right, and then go down.
I think you've got to join it up, right? In the old days in GI, all the business cases were based on claims because it was like the low-hanging fruit. It was a no-brainer. I think what you're going to see here is that a bit like what you're seeing in personal lines, where we're seeing people evolve and actually invest in non-sexy stuff like payments technologies and stuff like that, because they've realized that the whole thing's got to be digital and decent, right? I think what we're going to see here is that you have a big focus on investment and business cases built around the underwriting piece. And that hasn't been easy to achieve, by the way. A lot of major players are struggling to build those benefit cases. But I think the claims piece will come in that you can't take care of one bit and then leave the other bit untouched. So I think they'll have to take a more holistic view of both the kind of the underwriting and the claims side in combination, rather than picking them off separately. And I think that's the point. You can't have something that's really sharp and digital at the front and the underwriters are working so much more quickly, and then find that that the guys in claims are still working in the caves, as it were. So I think that's the thing where you're going to take a broader view.
They have started to let us out now, which is quite nice.
Let some of you
even
out,
let some
Andrew.
on stage, which is crazy. Andy, the same question.
Yeah, perhaps a slightly different perspective. I mean, for me, I always sort of try to play the long game on the claims business case, which is to get the senior people understanding your language. In the boardroom or the exec table, normally claims is quite underrepresented or has been historically. So, they're used to hearing about growth and channel management and operational efficiencies, and then these crazy claims teams come in and talk about indemnity and ULAY and ALAY and all these different terminologies. And I just think you have to start educating the senior people in the organization why claims matters. And the pretty simple device, you save $1 in claims, is you have to earn $5 for the same same outcome, and you just start drip feeding some of those really simple messages. And then I think once the people are familiar with your vocabulary and understand what you're talking about, then you go and ask for a big check.
Really like that approach. It's great. And then Patrick, yourself, finally.
But it's probably building on really both the points from Chris and Andy. I think the starting point needs to be what is it that you're trying to achieve in terms of what's the problem that you're trying to fix or the opportunity that you're trying to grasp. And typically from an Altus perspective, we try to take quite a visual approach to this, using models of what the whole of the insurance organization does, and then focusing on claims and the capabilities within that. What are you trying to deliver? What's the benefits to the claims function? But then more widely, I say, how can you bring it to life for the wider executive? What are the benefits or the impacts to the interdependent areas like your underwriting or capital management or your overall client or broker proposition? So if you can bring all that to life in a single view, I think that helps with that conversation, whether it's buy-in at the start or during the change management process.